Welcome back to Business Today, and as there's so much happening in the Colombo stock market, we thought of moving on to a lengthy discussion on this subject and to talk about the current situation and the areas related to the Colombo stock market. So let's move on to the segment. Yes, today we have Mr. Dimantha Mathew. He's Head of Research First Capital joining us. Good evening to you, Dimantha.
Good evening. Hi.
Right. First of all, the stock market has been a bit volatile throughout this year with many ups and downs, and the YTT growth is about 4%. Year-to-date growth is about 4%. So yes. What are the reasons for this volatility?
Actually, there are a number of reasons. If you take the economic climate, there has been ups and downs. The GDP growth has been quite slow in the first couple of quarters. Then we had the floods going on, and also there was so much being talked about the Inland Revenue Act that was supposed to get implemented a year back, and then it got dragged on. So there has been continuously a number of reasons that has affected the investors and the confidence levels of the investors. So there has been less buying interest on a continuous basis in the stock market. That I think has led to the ups and downs and sudden improvements and sudden declines in the market.
Right. On a positive note, we see a high inflow of foreign investment coming into the market, and year-to-date inflows amount to 18 billion rupees. So, irrespective of this volatility of the market, what do you think is, what are the reasons for this trend for foreign investors to come into the market?
Yeah. Actually, if you take the last couple of years, there has been outflows, but this year there has been a significant and notable inflow. The main reason is that if you take last year from July onwards, once the IMF agreement was signed, there has been some confidence levels on the foreign investors' perspective that some improvement in the economy will occur on a longer term basis. And we see now over the last 3 consecutive reviews that the third tranche also was released by the IMF. So that shows the continuous progress in the economy, and that has led to inflows coming back into the stock market. And also, if you really look at it, comparing with peer frontier markets, our market has been extremely cheap at the moment, and because of that, very attractive compared to the other frontier markets. Also, if you look at South Asia, has been identified as the driver for growth of global growth. So because of that, there is that foreign inflow wanting to take a piece of that growth coming in to overall South Asia as well. So as a part of it, we are also getting a lot of inflows, and also contributed to it is the economic improvement over this year that has happened.
Okay, so do you think the current economic climate and agreements with IMF are having an impact on this situation?
Definitely, definitely. What happens is when you have a global institution like the IMF tied up with this kind of agreement. Now you can see that it's a 3-year agreement, and it goes into a lot of reforms, structural reforms that occur in the economy, and which aims at putting the economy on a accelerated growth path, which has not happened over the last few years. So this gives the confidence for the foreign investors, and they do not really need to rely on the political climate that prevails as well, because you have an agreement and you have an institution quarterly and half yearly reviewing the progress of the economy. So that gives that added confidence and added boost to the investors.
Right, but at the same time, why isn't it same with the local investment? Because you don't see many locals investing in the market. Why do you think is this happening actually?
That actually has been a problem, because if you look at over the years, 75% of stock market participation comes generally from the local investors. So that has been part of the reason for the volatility as well, that there has not been sufficient local investor participation. Now the main reason for that could be the interest rates. Now if we look at it over the final quarter of last year and to probably the early part of this year, we have seen a rise in interest rates, and even today I think we see sort of fixed deposit rates at around 13 to 14%. So if you really look at it, sometimes investors are actually happy to get that fixed return of 13 to 14% at a much lower risk. So generally equity market is considered a higher risk instrument, which requires obviously a higher return, expected return as well. So what needs to happen is actually the interest rates needs to start coming down for the local investor participation to start improving in the market. So I believe in the coming months with even the government securities market, you can see interest rates have significantly declined. So we think that it will reflect in the banking interest rates as well, giving a better prospect for the local investors as an alternative investment opportunity.
Right. So thank you very much, Dimantha, for joining us today, and we really appreciate your presence today. Thank you. So with that, we got to wind up for today. Thank you very much for being a part of Business Today. We will see you next week, same time on Channel I. Good night and take care.